Hey everybody, welcome in. Let me flick this, boom, around, yes. Hey, so this is an interesting one. After the big anticlimax we had, obviously, yesterday with the most incredible earnings from NVIDIA, and at the same time, everything just pops down to earth because everybody's afraid of Jackson Hole tomorrow. What a fickle world we live in. Plus, there's more FUD around, FTX selling tokens, putting a lid on things. There's no transaction volume. It is now exactly 7 days since Bitcoin fell and went under 26K. But since then, it's been ping-ponging at 26K all the time. So that gives us time to do these types of projects. So what if we valued crypto based on fees? This is going to be a deep dive into exactly that. So thank you all for joining. And thank you to the mods in the chat too. And of course, my key isn't working, so I'm going to have to be clicking this. But anyway, now this is financial advice. And of course, this is unique content you will not find anywhere. So the story really, a much overlooked area that people don't look into. They don't analyze daily active users, daily fees, all that type of stuff. But we do. And we dug into all of the fees for all of the chains to see, very interestingly, how they compare and if we can build a valuation model out of it. In fact, I built about 4 or 5. But some of them were so extraordinary because no two cryptos alike. It's kind of like Bitcoin miners. They're all very, very different. So let's jump in and talk about where we are today. But first, I'm going to give a little bit of a backdrop as to what's happening with the summer slump and daily active users. So you can see here, this is kind of year to date, daily active addresses across all blockchains. And you can see it's down back at kind of March 2023 levels. Again, everybody's checked out. Everybody's having their time at the beach or wherever they go. And that's that. And also, I did share a slide on Tuesday. It caused a little bit of consternation, but here is the backup data for that slide. And this shows you the amount of development activity. Now, contrary to blockchain daily active users, developers have been more active over the last month than the daily active users. And these are the top chains with activities ranked. Ethereum number 1, Polkadot number 2, Cosmos number 3, Solana number 4, Bitcoin number 5, Polygon number 6, Kusama, which is under Polkadot, is number 7, Starknet number 8, ICP number 9, Cardano number 10. Nice to see Lightning in there too. But you can see that if you look at the 1 month change and the green numbers here on the right, they're very interesting. You can see over the last month, there has been a lot more weekly commits, which means development activity on Polkadot up 30%, Solana up 6%, Kusama up 11%, and Cardano up 35%. So things have been quite active there as well. They're not sleeping. And part of the reason you need to build to attract more daily active users and then charge them more fees to pay the bills and keep the lights on. So let's talk about what's excluded from this analysis because there's simply sometimes no transparency. Now, these chains are excluded because they don't publish daily transactions. And remember, we don't like chains that don't publish up a lot of transparency. So if they don't show you what you're doing, you shouldn't part with your money. That is rule number 1 of life. It's like any stock. If they're hiding the ball or delaying earnings, you know there's probably a problem. But the names excluded are ICP, Tezos, EOS, Terra Classic, Harmony, and Quantum. Again, you won't be missing much there. Anyway, now there are names that do publish things like transactions, but not fees. So these guys are also excluded. Again, Hedera, Sui, Aptos, Flow, Starknet, Caspa, Multiverse. They do have their daily transactions. Some of them are looking very suspicious, but we're not going to talk about that. But again, no transaction fees. No matter how hard you look, you cannot find. Therefore, they are not in here as well. The candidates that are, though, are the following, including names like XRP and Bitcoin and Base and others. All the layer 1s, all the layer 2s, a couple of currencies thrown in. And that is where we are. So it is enough to put together a nice analysis and identify some very interesting things that even stunned me. So smash the like if you learn something new, because I promise you will. So let's go to the first one. It's daily transactions per chain ranked. The most active chain with transactions is Solana with about 16 million. Tron is number 2, 4.3 million. Binance, 3.3 million in the news a lot lately. MATIC, 2.235 million transactions. And ETH, 1.04 million transactions. And then Ripple's there, XRP, with 940,000 transactions. And look at base. This is kind of stunning. Out of nowhere, they are doing 933,000 transactions a day. That is, I've never seen a project go so far in such a short window of time, but that is disruption. That's what happens in this world. But remember, everybody, there's no token for base, so don't get too excited, all right? There's no market cap, no token, but it is interesting to watch too. So let's look at daily active users. Thank you, Zeno. These are daily active addresses per chain ranked. And again, the winner here is Tron. Again, a lot of people in Asia use it for gambling. Highly addictive blockchain for that. And they have 1.1 million daily active addresses. Binance, just shy of 1 million. And Bitcoin, 638,000 daily active users out of about 50 million, apparently, non-zero wallets. And then you have the big three, which are always super close. It goes up and down between them all. But for this analysis, if you look at them like ETH, or MATIC is number 4, 303,000, ETH 302,000, and Solana 294,000. So super close, those three. And then down the line, you got Arbitrum 138,000, Optimism, or Base 120,000, and then Optimism down in 93, etc. And beyond there, it doesn't really matter. But again, like everything else in the world, I talk about black hole theories. There will be very few winners. There will not be 20 winners in this space. That I guarantee you. That does not happen. Just look at any other market. Look at semiconductors, for example. I can't remember the numbers, but the NVIDIA has like 8 times the market cap of Intel. And Intel used to be the biggest semiconductor company in the world. That's how things change. They can change rapidly. Just remember, look at base. Now, let's go to, I don't know why I'm holding this in my hand. Habit, I guess. Let's go to the daily transaction fees and average transaction fee. Now, the average transaction fee across all chains varies. Some are cheap, some are very cheap, some are expensive, like $5 a transaction. But the average across all of these chains in the study is 39 cents. Most expensive being Ethereum, and the cheapest being Solana. So the question is, what will happen over time? Will cheap win or expensive win? And it's going to be so interesting to watch, because now as well over time, I'm seeing chains reducing their prices because they want to attract more transactions. So the question is, are they going to all price themselves out of the market? What is the threshold of how much you need to make in daily active fees to survive? That's going to be critical. Now, this is stunning. This is a big aha moment for me. If you add up all the fees for all the blockchains, you can see that Ethereum and the Ethereum layer 2s make up 70%, 74%, or 3/4 of all fees. Total L1 and L2 fees, all chains is 7.012 million, and ETH and L2 fees make up 5.2 of that. Massive, massive chunk. So if you're serious about this whole space, you got to have a position in either Ethereum or some of the L2s, because they make up all the fees. Therefore, garner a lot of the value in the space. So let's look at some other numbers too. It's a numbers channel. Moto, good to see you. So these are Bitcoin and layer 2s. Again, a powerful segment. I threw in Bitcoin there just to show it as a benchmark, because I want to keep the layer 1s separate. And that's the way I kind of view the world. But you can see here, daily transaction fees, daily addresses, 638,000 for Bitcoin, and fees just shy of $500,000, which isn't bad. The average transaction on Bitcoin right now is about 86 cents. So you can calculate the actual transactions from there. Base, you can see daily transactions, 107, or daily transaction fees, 118,000. That's massive. That's more than Arbitrum and Optimism and MATIC. MATIC are only doing $20,000 in daily fees. So that is kind of stunning. And that is the nature of the beast. Obviously, Base has done well because it's from Coinbase. They have direct access to an existing captive market, but still, it's impressive to see. Now, layer 1s ranked by fees, different kettle of fish altogether. You can see here, Ethereum, the lion's share, nearly $5 million a day in fees. Massive. And then Tron, over $1 million a day in fees. Binance, $250,000. And then number 4 of the layer 1s is Solana, 42,853. Remember, their fees, though, are a fraction of what anybody else does. Avalanche, 13,670. And then the red zone would go Cardano, Phantom, Cosmos, Near, and Polkadot. Polkadot at $79 in daily fees. It's kind of, I hope they're not depending on that for survival as we go forward. So let's look at another view of the world. This is fully diluted market cap divided by daily active users. Now, I use fully diluted market cap because some of the chains are new, like Arbitrum and Optimism. So if you're not using FDMC, you're going to have very misleading numbers. But if you calculate the fully diluted market cap divided by the daily active users, the winner here is MATIC, $18,000 worth of market cap per user. Very close behind it, within a couple $100, is Phantom, $19,000. Then near $23,000, Binance, $34,000, and Solana, $41,000. This actual set of metrics has changed a lot recently, and it fluctuates every day depending on actual users and the price of the tokens that drive the price of the market cap, etc. But it is interesting to see. Then at the bottom, you've got Polkadot, $770,000 in market cap per user, which is not sustainable. Solana or Cardano, $397,000. Cosmos, exactly $200,000. So they need to scale up the number of people using their chain. Avalanche, $138,000 market cap per daily active user. That's also extremely high. So you want to be kind of in the green zone, and good to see MATIC back on top. Now, this is the pricing model. So what I did was, for the select L1s, I took out things like Binance and Ethereum because they're kind of a different kettle of fish and it does skew the numbers heavily. But what I did do is I took all of the fully diluted market caps divided by daily transaction fees and created an average number. That's what I call FDMC over daily transactions. And that created a modifier. So if you take that with the existing FDMC over daily transactions, multiply it by the modifier of the average by the actual token price, you get a potential estimated price. And this basically, you can't measure assets like crypto this way, but it is a very good indicator as a base to understand what the chain is actually valued at. So if you can imagine, there's a situation now where people are paying priority fees, to rush something through. This model will help you identify how high you can go without losing business benchmarked against other chains, and then how much that could result in value capture for the chain, which will result in upside price. So if you do that, again, we're seeing a lot of variations, but it shows the potential upside for chains if they were to charge higher fees or if they were to grow more. So the delta price from this analysis is Solana, because that, if you did use this way of measuring the value of a blockchain, Solana should be priced at $123.58, which is 464% upside. Phantom comes in number 2, 438% upside. It must be valued at $1.13 if you use this metric here. I'm not saying you should, just as an idea. Avalanche comes in 3rd. The price of Avalanche should be $30.42, an upside of 194%. Near comes in at number 4. Price should be $1.35, upside of 12.56%. Not worth getting too excited over 12% upside, but it's just numbers. And then Cardano should take a 21% haircut down to 21 cents. Cosmos should take a bigger haircut down to $3. Tron should go down to 5 cents. And Polkadot should be worth $1.02, down 77%. So again, not saying you can use this, but this is one of the many guides you can use to identify where there is compelling value. If I did put in the numbers for Ethereum and Binance, it would look haywire, but I may do another one because I created 4 different valuation models for crypto as well. And they're all very interesting, and all the chains are all over the place. It's fantastic to see. So quick conclusion, everybody. Short one today. It's been a long week. These are the fees per chain in a log scale. Now, it is a quick summary, and you can see the variances are incredible. Look at Polkadot doing $79 a day, and others like Ethereum doing, $5 million a day. It's quite a difference. Now, if you're going back in time, like 4 or 5 years, you were thinking Polkadot, could be up there with Ethereum. but you can see it's where the fees are at. That shows you where the value is being transacted, and that's where the value is in the chain. That's why I believe this is one of the key metrics that's very, very important to look at for valuing blockchains. Now, I did put in a red line here as well, because my personal gut, if I was a value investor in crypto, I would not touch anything under this red line, which means under $10,000 in fees a day. That would be scary. And if a chain is planning to survive and under 10,000 fees a day, it's a problem. Now, in the next part of the summary is what we learned from this little exercise. 1, ETH and layer 2s dominate the fee world, 74%. I think it shouldn't be 72%, 74% is the number. Base is stunning, but remember, it's got no market cap or token, but the adoption has been absolutely mind-blowing. Solana dominates transaction world. Tron dominates the daily active user world. Daily active users fluctuate violently. We saw Sui having a big spike in daily active users for 2 days, and then it fell right back down to earth very quickly. So again, watch it carefully, watch 7-day moving averages, zoom out and look at the chart. And if you price tokens based on fee revenue, Solana has the most upside of any token out there. So that is the conclusion. That's one of the reasons why I believe Solana is a good hedge to my Ethereum and Bitcoin positions, and that's why I'm in it. So hope that helps. Smash the like if you like this type of content. And if you're interested in more valuation models, of course, I can do that too. But this will be super interesting as well. These models are built, flick a button, and we can see exactly how things change. And we can even do this as more of a monthly series to keep a track on things. Because, for example, if the price of tokens, say Solana, goes up to 40 or 60 bucks, while something else like Phantom remains cheap, it might be worth pair trading into them. So anyway, that's the lesson for today. Thank you all for joining. Thank you to the mods in the chat. Hope you like the show, and I'll see you all tomorrow. Bye.